Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm happy to join you on this Monday, May 15th. Before I get into everything, I just want to make sure everyone understands we have a special coming up, our spring special. This is a great time to try our service using our 30-day no-cost trial. So you can come on board, check us out for 30 days, especially if you like what you hear today. These are some of the things I've been telling members about for the last year and a half, keeping them out of harm's way during the bear market in 2022, and then also providing them the courage and confidence to get back in the market and enjoy this ride up that we've seen over the last 6 to 9 months. It's been a great time to be an Earnings Beats member. You might want to check this out. Start your free 30-day cost-free trial today. We'd love to have you. And then we have our spring special coming up. So again, if you like our service, you're going to get the best deal of the year. So make sure you check that out and sign up. We'd love to have you. All right, my 5 charts today, what I want to do is first, I want to put a little perspective on what's been going on, because I see a lot of folks that are in the bearish camp just continually changing their story about why this market can't go higher. It started off, it was the whole inflation thing, it was interest rates, it was the Fed, it's a possible recession, it's breadth, it's the lack of participation of small caps. I mean, it just goes on and on and on. And the thing is, once you dig your heels in, it's hard to be objective and look at what's been going on in the market. And that's what I want to try to help you with here today. First chart, S&P 500 is on the top, but I also have the NASDAQ 100, the mid-cap index, that's the S&P 400 mid-cap, and then also the S&P 600 small cap. If you look across here, yes, I will grant you that the S&P 500, especially the NASDAQ's been the best performer in 2023, continuing to roll to the upside. S&P 500 has been a little bit more sideways, consolidating. And then you can see mid-caps actually since early January or since early part of the year, end of January probably, have been going down. Small caps, same thing. And so now the latest thing is small caps and mid caps aren't performing well. Well, part of that is why we're not seeing breadth. I mean, there's a ton of small cap companies across our major indices. So when you're looking for companies that are underperforming the S&P or not above their 50-day moving averages or not setting new highs, anytime you have small and mid cap stocks going down, you're going to see that. But what I want you to focus on is the big picture. Have some perspective. The small caps and the mid caps tend to go along with the S&P 500 over time. They don't always outperform, but sometimes they go through periods where they outperform significantly. Just take a look back for the last 10 years, which is most of this bull market, secular bull market that we've been in. Again, S&P 500 pretty much just going up nonstop. We've had a few hiccups along the way, but for the most part, we keep going higher. NASDAQ 100, same thing. Mid caps and small caps, shocker, same thing. Yes, last 3.5 months, these groups have underperformed, but they've gone through periods where they've significantly outperformed during this last 10 or 11 years. The bottom line, though, is if you keep perspective, you will see that these groups just continue pushing higher and higher. All different asset classes are continuing to push higher, even though rotation can make it very difficult in the short term and maybe even hallucinatory, where you look at them and you say, well, if the small caps and mid caps are going down, the market can't go higher. Not true. Not true. We continue to put in higher highs, higher lows throughout the last 10 years on even the mid caps and small caps. Keep the big picture and keep perspective in mind. All right, I want to talk to you a little bit about seasonality. So the first thing I pulled up is the QQQ relative to the S&P 500. And I went back 11 years so that you can see what's happened throughout this secular bull market. I consider the secular bull market when we broke out in 2013, it was April 10th, 2013, we broke out above the 2000 and 2007 highs on the S&P. When that happened in 2013, I felt like that was the birth of the next secular bull market. Since that time, the QQQ relative to the S&P 500. If we look down here, January through December, we can find out when QQQ outperforms and by how much each calendar month. We add it up, and that'll give us our annual outperformance. So check this out. January, if I go across these bottoms and add 1, 1.2, 1.8, 1.5, 2.5, 2.8, 4.5, 5.7, 5.3, 5.6, and then 4.9. All I was doing was cumulatively going across and adding those in. 4.9% average annual outperformance of the QQQ relative to the spider. Now, ready for this? Look at May through August. 1%, add the 3.3, so you 1.3, 3.0, 4.2. 4.2% outperformance, 4.2 percentage points from May to August. Growth stocks on the QQQ relative to the more value-oriented spider. So of the 4.9% average outperformance throughout this secular bull market, growth versus value, at least this particular one, QQQ versus spider, 4.2% of it, more than, what is that, 7, or 7/8? That's about almost 90%, 87% of the strength has been in the May through August period. Yet the media tells us to go away in May. Maybe the S&P 500 weakens a little bit, but this is where you get the strength in growth stocks. Do you really want to sit on the sidelines? Ignore the media. I say it all the time. Nobody does research. They just pick up a story and they're trying to get eyeballs. They're trying to get clicks. They're trying to come up with headlines that make you want to tune in. They don't care if it's right or wrong or whether it's misleading. Listen to the research. Follow what works during various times of the year. Next chart, another seasonality. This is large cap growth, IWF, versus large cap value, IWD. Again, let's add across for the year. This is since 2013, since the secular bull market started. 0.8, add 0.2, you get 1.0. I'm going to go across here cumulatively again. 0.8, 1.0, 2.0, 1.9, 2.5, 3.4, 5.3, 7.0, 6.3, 6.2, 5.8, 4.9, same as the QQQ versus the spider. IWF, large cap growth, outperforms IWD, large cap value, by an average of 4.9% per year, simply by adding that across. What about May through August? 0.6 and 0.9 is 1.5. Add in 1.9, that's 3.4. Add in 1.7, 5.1. So 4.9% for the year, 5.1% in the 4-month period we're in right now. Since this secular bull market started, all of the large cap growth outperformance versus large cap value has occurred during these months that everyone wants us to go away. May, June, July, August. It's crazy. It's a crime, folks. And I hope if somebody from CNBC is listening, give people the truth, educate. All right, off that rant for now. Still got plenty to talk about, though. I want to show you one more chart here. This is the mid cap and the small cap. So I want to point out, here's the absolute chart. No doubt in my mind, I'll agree with you. If you say, hey, mid caps and small caps are outperforming, 100%, I agree. Since the beginning of February, you can see this has been going down. NASDAQ setting new highs, S&P pretty close to that February high, not quite there, but pretty close. Clearly, mid-caps underperforming, right? Scroll down here just a little bit. You see this red line? That's the small caps going down since the beginning of February. They're both going down. I'll grant you that. But do you know what's going on under the surface? I want you to look at the Dow Jones US mid-cap growth versus Dow Jones US mid-cap value. What's been going on in 2023? Not just since, up to early February. What has been going on throughout the entire year? Money is rotating from value into growth. We're setting a 52-week high. Mid-cap growth versus value. We've taken out the August high. Does that sound like a market preparing for a big recession and a big drop? If the Wall Street firms were thinking we were going lower, they would be getting out of growth and into value. It's the exact opposite, folks. There's your mid-cap growth versus mid-cap value. Scroll down. You think small caps have been awful? Well, maybe they have, but Wall Street firms are using this weakness to get into growth, small cap growth versus small cap value. We broke out 2 months ago to a 52-week high, and we're setting new highs now. Why does everyone want to be bearish? Stop watching the lips move and look at the charts. Look at where the money is going. Listen, if the market rolls over and the S&P and the NASDAQ roll over and start moving lower and take out recent lows and money starts shifting in more bearish fashion, I'll be the first to jump on board and say this market's going lower. But that's not what the market's telling me. That's not what these charts are telling me. These same charts that told me at the beginning of 2022 to get out, or at least to get cautious, are telling me we're going a lot higher. It's a different message given out in 2023 versus 2022. You can ignore this. There's two sides of the market. Maybe we go lower. Ignore this if you want. I'm not going to ignore it. I think we're going higher. This is one of the many reasons why. Let's see what happens. Last thing I want to tell you, we have a big event coming up tomorrow night for our members. Tuesday starting at 4:30. We have our Max Pain event. We do this every month. The Tuesday before options expire. Options expire on Friday of this week. I want to give you an example of a chart that I pointed out to our members last week. Riot blockchain going into April, actually throughout much of March and into early April, this stock ran from $5 and change up to over 14 in a little over a month, 5 weeks. But the problem, everybody jumped on the calls. There was so much in the money call premium on Riot with 3 days left to option expiration. And I told folks at the time, Riot was trading at, 13 and change. We closed on that Tuesday. I think it was around 13.60 or something like that. And I said, Max Pain on this stock is around $10. Yep. Like a 30% potential drop to go down to $10. Now, normally we're not expecting it to go all the way down. It's a directional clue. It's telling us that if you want to buy Riot, wait, because it is in the financial interests of market makers for prices to move lower. Look what happened over the next 3 days and then into the Monday of the following week. We went all the way down to $10. And technically, all we did is went back to where we broke out from. Really doesn't look like anything, right? Well, it saved the market makers millions of dollars. Why? Because as everyone was buying the calls on the way up, market makers were selling those calls. They provided the liquidity. So it was in their best interest in the short term for prices to come down. I wouldn't be surprised if we had market makers selling on behalf of their own accounts to drive prices lower. Can't prove it, but I've seen this enough. And that's what we're going to do on Tuesday after the market closes. We're going to have our next Max Pain event. If you want to find out stocks you might want to avoid, stocks you might want to buy based on Max Pain, you definitely want to come in and check that out. So again, start your no-cost 30-day trial. Make sure you're there on Tuesday. It was really a pleasure joining you today on your Daily 5. Again, please remember to go over to earningsbeats.com, sign up for our free 30-day trial. You'll be able to join me Tuesday afternoon for our monthly Max Pain event. Then again on Thursday afternoon for our portfolio draft. That's where I announce the top 10 equal weighted stocks in each of our 3 portfolios. Our model portfolio is up 128% since November 19th, 2018, while the S&P 500 is up 53%. It's up, we're 2.4 times the S&P 500 over the last 4.5 years. So I'll explain on Thursday how we strategize while constructing these portfolios, and then I'll provide you the latest 10 equal weighted stocks that will comprise all of our portfolios. Please take us up on our 30-day free trial offer. Our members love us. And hopefully I'll see you Tuesday night for Max Payne. Happy trading, everybody.